Welcome to Mad Money. Welcome to Cramer. I'll be my friends. I'm just trying to make a little money. My job is not just entertain, but to explain, teach you, because maybe we got a lot to talk about tonight. Call me, 1-800-743-CBC. Tweet me at Jim Cramer. These days, these days are insane. More record highs, more positives, more money made. And yet another week where the market's hated, just despised. The complaints about it are myriad, and nobody champions stocks except, well, us. And, of course, the legion of buyers who propel these stocks higher. The averages always tell the story. Dow gaining 173 points, S&P advancing 0.49%, NASDAQ climbing 0.72%. It was a really good session, and all I heard were gripes. The rally, once so narrow, is now amazingly broad. The banks, the transports, all sorts of tech, utilities, so many other sectors, small cap, mid cap, whatever, they all just march higher. Now, I know the speculative stocks are a very visible part of the market, and that rankles the pros. But that's been the case with this market ever since the GameStop affair way back in January of 2021. So get over it. Is it more frothy than we'd like? Sure. But it hasn't stopped us from going higher any more than the concentration the Magnificent Seven did not that long ago. Right now, there's a widespread sense that the obsession with the data center represents the top. Yet every time good news or even rumored good news, like Meta perhaps contracting with Oracle for a $20 billion cloud computing deal, well, what happens when it comes out? Fresh new highs. One of these days, we will have a top, a genuine peak. But the things that are supposed to signal a top simply haven't done their job. That's why so many people truly dislike this market, even though it keeps going higher. See, people see things that ordinarily would signal that stocks are ready to peak. But then it doesn't happen, and they don't adjust their expectations. They double down on their negativity. So we watch Oklo up another 29% today. This is when they were up 100 since I said just go buy it. Because the government favors nuclear for the umpteenth time. We look at the quantum computing stocks, I think you have to buy those too. And we know there's nothing there in the near term. But eventually, there could be, even if those future gains might not go to quantum stocks that are currently trading. But nuclear and quantum aren't nearly as close to earnings, let alone earnings breakouts. But you know what? The buyers don't care. Some say they are thinking long-term. Others say they're gambling. I say there's something else. I think they're winning. And so many wait for the moment when the craziness subsides without realizing that perhaps the only thing that's crazy is the way so many people seem to despise making money in this market. Except right here in Cramerica. And by the way, I'm not apologizing for this, my vocation. If ridiculously speculative stocks keep being winners, I say you should probably try to own one or two of them rather than fighting it the whole way. That's a big theme. My new book comes out in 11 days. I talk about in a full chapter how to speculate wisely, because I don't want you left behind, even though this book is about investing. And with that totally pertinent rant, let's get over our game plan for next week. By the way, everyone else right now is really tired. Not me, partner. All right, here we go. The president had this big call with President Xi today, right, with China. And all we heard about is that there was this solid discussion about TikTok and some sort of deal reached. I don't think that's the way it comes out with this president. He gives a nice talk, but then saves everything for the weekend. I think over the weekend we'll find out about the other things that were discussed, including what the Chinese will buy from us in exchange for a trade deal. Look, I don't think a long call with the head of China was purely focused on TikTok. I mean, TikTok's like 9 seconds. How about NVIDIA? How about ag? Let's find out what was really said. I think it'll move stocks on Monday. Next up, Tuesday. Tuesday morning, we have AutoZone AZO reports, and I've been recommending this stock for 2 decades because no matter what happens, the company takes whatever cash it has on hand that's spare and uses that money to buy back stock. It's the most aggressive buyback in the New York Stock Exchange. Plus, the average car on the road in this country is getting real old. New ones cost a lot of money. After tariffs, too much money. If you want to repair or maintain your old car yourself, it's easier than ever because the instructions are all on YouTube. Even 5, 10, 17 thumbs, I figure out stuff on YouTube. And the parts, you can buy them at AutoZone. Tuesday night, we hear from one of my absolute favorite companies, which is Micron, symbol MU, or MU. Talk about a sink-or-swim business. When this commodity chip maker is plummeting, it tears your heart out. Like Indiana Jones' Temple Doom. When it's ramping, it can't be stopped, except that is by the CEO, Sanjay Mehrotra. Sanjay likes to tell you the truth. And he knows that when a stock soars as much as Micron has lately, it can cause real heartache if anything at all slows down. So he calms things down. He's a prudent person in a market that often honors recklessness. And you know what? I love that. When you look at the outrageous trajectories in the nuclear stocks, say, or the quantum stocks, can you imagine any of those execs from those companies ever coming out like Sanjay and questioning whether their stock should be so high? I certainly can't. I wish more executives would be like this honest man. Either way, Micron's had a big run. I want to wait for a pullback before I recommend it. And I got to tell you, I really did like it. Rewind the tape. In the 80s and 90s, I was all over the thing. Wednesday morning, we get new home sales. Now, we want to see more transactions, but if bonds keep going down in price and up in yield, something that's been right on our faces since the Fed cut short rates Wednesday, then we just aren't going to get the kind of home sales numbers that we'd like. The good news for the housing market, the pool of older homes is growing. The bad news, until we get mortgage rates back down to 5 and change, I don't think there's much hope of boosting home sales to any level that I think is consequential. Now, also Wednesday morning, we hear from one-time market darling, Cintas, the uniform rental company, also provides a bunch of other large services, largely to small, medium-sized businesses, but they've got some large ones too. I think Cintas could bring us an upside surprise. I like it very much at these levels. In the evening, KB Homes reports, and I bet it follows in the footsteps of Lennar, which got hit really hard today, off of some gross margin pressure and the aforementioned stubbornly high mortgage rates. By the way, can I just say, Stuart Miller of Lennar, he's fabulous. So if they were struggling, everybody's struggling. These home building stocks simply won't get traction until the Fed says it's not as worried about inflation and it sees a clear path to taking the federal funds rate down to 2 to 2.5%. Until they do, KB Home's just a trade, and I don't want to trade. I talk a lot about that in my book. Trading is for suckers, okay? It's for suckers. Thursday morning, we get results from one of the great stocks of the moment, and nobody ever talks about it except for me. It's Jabil. Now, Jabil manufactures, it's a manufacturer and does a lot of the technology we see every day. I think there's tremendous demand for so much of what Jabil makes, so the quarter will once again be terrific. Jabil's consistently brilliant in its making, say, printed electronics, devices, board assembly, among so many others. Now, the big problem here is that people don't really understand all the different things they do, but I really do like them. Let's talk about Thursday evening, though. There we have Costco, and right now Costco is stuck in a kind of a purgatory, very high PE, 53. I find you don't want to buy Costco until the PE goes below 50, but I own it for the Chadwick Trust, and I'm willing to hold it all I want. It's hard to believe that Costco can vault higher from here, but I think maybe it can. And then finally, we've got this really hard thing to understand, okay? It's the Fed's favorite gauge of inflation. It's called the Personal Consumption Expenditures Price Index. We care about these indices because we want the Fed to get out of the box where inflation goes higher and hiring gets worse. They can't get too aggressive about cutting rates until inflation is truly beaten. But it's hard to get a read on inflation because a lot of these numbers come from tariffs. Ideally, we want to see some data that shows you that tariff-related inflation is one-off in nature. Maybe we'll get that Friday. Bottom line, no matter what, we have to accept that this week brought still one more round of skepticism, derision, head-scratching, and befuddlement as the vast majority of commentators and analysts, at least the ones that I listen to, continue to denigrate a market despite the fact that it's made a huge amount of money for the true believers and people who belong to the great nation of Cramerica. Let's go to Robert in New York. Robert.
Hi, Jim. Long-time listener. Long-time listener. Thank you for everything that you do. I need you to connect the dots for me today, and please explain why the competitive threats to Visa from stablecoins and blockchain is dragging a $400 stock down to $300.
Okay, Robert, you're right in my wheelhouse. I'm going to tell you, you're right in my wheelhouse. That's what's called the opportunity. These different little entities, and they are very little, have created the opportunity that you need to be able to get a Visa at a good price. Periodically, you get it at a good price. And when you do, pull the trigger. Sam in Massachusetts. Sam.
Jim, with markets at all-time highs, I was interested to see Adobe near 2022 lows. Looks like the stock suffered
very tough. Very tough. Adobe made that quarter, but I think a lot of that was price raising, and I want to see organic growth. If you want to know, like, what, you want to compare that to something, compare it to Workday, which we had on the other day. And I think that they were doing it by doing new deals, not at higher prices, but just a lot of new deals. Organic growth is what we want, not price-driven growth. All right. For some reason, a lot of experts continue to denigrate a market that just makes new high after new high after new high. Get over yourselves. It's worth remembering. It's really good to make money. On Mad Money tonight, FedEx blew away Wall Street's expectations when it reported earnings last night. I'm taking a look at the numbers and giving you my take. Then why did Darden investors have so much beef with the company's latest report? I'm going to dig into the details, see what the heck's going on there. And the Investing Club held our monthly meeting yesterday. I don't know, you can watch the tape. We didn't get a chance to get through all the questions. I'm taking a few more of them as this market charges higher. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.